Lonsec wishes to remind that the information we provide on our portfolios is general advice, and we encourage investors to read the PDS or seek professional advice prior to making any decisions on their investments.
Hi, I'm Martin McGrath from Financial Edge Group. Today, we're fortunate enough to be sitting down with one of the experts in the industry. We work very closely with Lonsec, and we're fortunate to have Lucas to help kind of answer some questions about what's happening in the market at the moment. And so let's dive into some questions with Lucas.
Certain sectors have benefited from the COVID environment, while others have suffered in recent times. What may be the possible implications for investors and in a post-COVID world?
Yeah, look, it's a good question, because if you look at companies, Australian companies, over the last sort of 12 months, it's really been a tale of winners and losers, and at the extremes. So if you think about companies, some of the retailers, particularly those with an online presence, and during COVID, everyone was locked down, everyone went crazy. I mean, I've got daughters, and I just had my doorbell ringing every day with some package being delivered, whatever it was. And so some of the retailers, your JB Hi-Fi's, etc., for example, had incredible
super cheap order,
Scali, everyone was doing home renos, whatever, so some companies just had incredible earnings and well in excess of expectations. Now, whereas on the other side of the spectrum, then you had some industries, you look at, obviously, your airlines are the notable ones, some of the infrastructure assets. So, people, Transurban or something like that, where, people obviously weren't driving around, there's people using toll roads and the rest of it. So you had a real sort of barbell of these big winners and these big losers, so to speak. And what I think is going to happen is as we things reopen and hopefully we get back to sort of some kind of normality, is that because when you think about the market, the market's trying to price future earnings. And it's probably fair to say that, would you expect some of those stocks that did really, really well in that environment, will their earnings continue at that sort of rate going forward? Probably not. They might be still strong, but the extent of it. And then conversely, some of those stocks that, your airlines is a good example, that were absolutely battered in that environment. As we open up, as travel, we just, was it today? I think it was international travel. We had people flying back into Australia and so forth. So, well, I guess that's a long way of sort of saying is that you might see a bit of a rotation in terms of some of the stocks that do really well. And again, that's why being active from a portfolio perspective will be important. And having, again, that diversification within the portfolio, that you're not just anchored to one part of the market that has done really well over the last 12 months, because the next 12 months may look a little bit different. So we are seeing a lot more divergence, a lot more opportunities, and so forth. But you probably, it is an environment that will probably suit more active approaches. They're not. I mean, an interesting one, just the final company one. I don't know if you guys saw, but I think it was the CEO of Woolies was actually saying that some of their sales numbers have gone down because as things have opened up, people are eating out more again and buying less. Just that sort of the general trend is buying less from so. It's all sort of related. It's all sort of you can see how it sort of impacts companies in different ways as we reopen.
People aren't stocking up on toilet paper.
Yeah, exactly. Yeah, exactly right.